Hey guys, Akil Stokes here with Tier1Trading.com and welcome back to another Weekend Trading Edge video. If you guys are brand new, this is a video that I do each and every weekend showing you the top trading ideas that are on my radar for the week ahead. If you're someone that tunes in each and every week, thank you for the support. Make sure you're subscribed. I know a lot of you guys watch this, but you're not actually subscribed. Make sure you hit that subscribe button. That is a great way to support the channel. We're going to start here on oil today, and we're going to be advanced pattern formation hunting, right? We did a video midweek on the dollar index, the Dixie, where we had a similar situation where we talked about the markets being in a little bit of a sideways action and where many traders think that it's junk and zero opportunities exist. Those who have the eye or the skill or the knowledge to kind of read in between the lines, there are actually some golden opportunities out there. I actually spoke to a trader this morning who was doing some research on advanced pattern formations, doing some back testing, and wasn't really happy with the results. I would just say this, before you get into back testing, I know we always want to rush into it because that's, a proper step before demo trading and ultimately trading live, which is the goal. But it's very important that before we backtest, we actually spend time training our RAS, our reticular activating system, to see whatever pattern formation or whatever strategy or signal we're looking for. Because a lot of the time we start our testing at a time where we're just not skilled enough and practiced enough to see it. And therefore we either see situations that are bad and invalid, or maybe we just miss some because we're not trained enough. And that's going to skew our data. So make sure you take the proper steps of training your eyes, training yourself first before you go into that back testing phase. Now, we're going to be here on soil, right? US oil. And we have a potential Gartley pattern forming right in this area of consolidation. There's actually multiple potential patterns forming. We're going to concentrate on the first possible one. And what I'm going to do is I'm going to zoom my chart a little bit so it stands out to you here. And we're going to start measuring this bad boy, right? We're going to start right up here at the top of our range. This move, this swing high to swing low, this anchor leg is going to be my X to A leg. This is the initial starting point, the initial leg that we need to identify as far as drawing advanced pattern formations go. I then want to take my Fibonacci retracement tool. I want to drag it from the high of my X to the low of my A right here. And I'm paying attention to what Fibonacci level is hit, because depending on which Fibonacci level is hit, that's going to determine what type of pattern formation I'm looking for. If a 3D2 is hit, I'm looking for one thing. If a 50% is hit, I'm looking for another thing. If a 618 is hit, I'm looking for another thing. If a 786 is hit, I'm looking for another thing. So it's very important that we work through this process step by step. That way we ensure that we're looking for the right thing. You can see that price action comes to our our 618 Fibonacci retracement. This is going to be our B leg right here. And then we get another failed extension to the downside, stays above A. This is going to be our C leg. And now what I'm looking for is horrible drawn C. Now what I'm looking for is my D completion, which is going to come in a 127 extension taken from the low of my A leg to the high of my B leg. So Fibonacci extension, swing low to swing high and back up. And I'm looking for this 127 to be my D completion level. And if we're looking to draw it out in more of a zone type of way, what I'll do is I'll take my zone starting at the 127, since this is the official completion point, and then ending at the high of X. So you can see if price action were to make its way up to this level here, and I'll connect the dots here, doop, doop, we would have what's called a bearish Gartley pattern. You can go down to a lower time frame as well. I personally enter aggressively on these, but another option is go down to a lower time frame, look at our zone, and then look for price action to give you whatever signal it is that you need within this zone in order to look for sells back down to this area. So US oil daily chart / 4 hour, maybe it's a lot cleaner on the daily, potential bearish Gartley. Next up, we're going to go to silver. We're going to go from talking about advanced pattern formations to talk about classic pattern formations, right? If you guys want more knowledge on classic pattern formations, two good books that I recommend are One, the Encyclopedia of Chart Patterns by Thomas Bulkowski. It's like, it's not really a book, it's more of a reference guide. I have volume 2, I believe there's a volume 3 that's out as well. I think they actually talk about harmonic patterns there as well, so that may be worth checking out. And then there's the old classic, I'm gonna forget the name, but it's called Technical Something of Price Action. Give me 1 second to see if I can find it in my library. Technical Analysis and Stock Market Profits, a good old classic book to read about if you want to be a student of classic pattern formations. But what we have here is a bearish flag pattern, right? You can see actually we had both of these back to back, right? We had a similar situation right here where the market violated our previous level of structure support right here, pushed down, gave us a nice little flag back up, broke out to the downside, once again, violated our previous structure low. If you've been a follower of the video, you know we have a process called IPDE, Identify, Predict, Decide, Execute. It's a 4-step process that keeps us consistent and keeps us aligned with our prediction process. And a part of that prediction process is how price acts at structure, and a violation in a certain direction allows us to predict a continuation in that direction. So in this case, a violation to the downside allows us to make the prediction that price is likely to continue to the downside. And then we do something very similar in the form of this flag pattern, right? Now, I'm not a big fan of flag patterns personally, aside from like high and tight and low and tight flags, just because of my philosophy on horizontal structure and whatnot. But what makes this one stand out is because it's just not a flag pattern. Again, it's a flag pattern that violated a previous level of structure. So the flag of the flag pattern, right? The pole is the extension. The flag is nothing more than a series of complex pullbacks, making this a bearish pullback trade as well. And something I tell the members that I teach and coach is that, you know, yes, it's cool to know all these patterns. It's cool to know what they look like. It's cool to know their names. You can have some good trader talk on the internet and whatnot. But at the end of the day, understand what these patterns actually mean. And all of these patterns are just kind of complex versions of the simple things that we need to pay attention to in the market. And if we can understand and learn to identify the simple things, it's going to make you view these patterns and many other hidden situations in a whole different light. And that's been a game changer to a lot of the traders I work with. But we got a flag pattern here, and what we're expecting is a bearish continuation / bearish breakout, right? So now the next question is, if we are going to continue bearish, where are we likely to continue bearish to? Where there's a few things I want to do. Once again, I'm going to drag my Fibonacci extension tool. I'm going to drag it from the swing high to the swing low of our bigger move right here, the move that violated previous structure support after this double top up here. You can see we have a 127 extension right down here. I'm also going to take that Fibonacci extension tool and drag it from the top of the previous flag to the bottom of our current flag pole and back up. And you can see that we have another 127 Fibonacci extension sitting in that same level. More importantly, you know I love to say it, look left, structure leaves clues, a very nice structure level right here. I don't know if we have anything looking lefter. Not so, a little bit, not so much that's important, but a very nice structure level right here. And then finally, if we just put some volume on from our swing here, we're going to see that we have a nice little volume spike in this level as well. Really volume spikes at all of these consolidated levels, but a little bit of a gap before we get to this next one. So this is a decent zone to look for extensions for this bearish flag pattern. So we spoke about advanced patterns. We spoke about classic patterns. Lastly, we're going to speak about simple patterns. And this is a simple trading opportunity. This is how I got into trading. Well, this is how I got into trading once I started getting good, right? Before the good phase of trading, right? I did a whole bunch of dumb stuff and bad stuff and probably all the same stuff that you guys have done or are currently doing. I think that's one of the reasons that I've become a great coach. It's not because I have this profound knowledge and super secret strategy. It's just that I've done all the stupid stuff that you're about to do. So I'm able to kind of catch you before you do it and give you advice once you do it. But after I kind of recreated myself as a trader, I started simple, right? I started with structure-based trading. Look left, structure leaves clues. And this is a perfect example of looking for a structure-based trade, right? If we zoom out, you can see price has come to a major level of structure, right? A big old stinking V reversal, big long wick to the downside. Very important major level of structure right here, and we are coming right to it. So what I would expect is a period of relief. Price action has put in 1, 2, 3, 4 strong bearish days in a row. We're finishing up a bearish day right now. There's still a little bit of time left before the markets close, but we're finishing up a bearish day right now. But I wouldn't call this a strong bearish day because of the candle, right? We teach about candlestick formations and learning it from the very basics, right? Everyone wants to do these pattern things, but if you don't understand the basic formation of how to read a candlestick, you're going to be in trouble, right? I think of it like reading a book, right? Everyone wants to read a book, but you can't read a book if you can't read chapters. You can't read chapters if you can't read paragraphs. You can't read paragraphs if you can't read sentences. You can't read sentences if you can't read individual words and going all the way down to letters. That's how I look at candlesticks, right? These are individual letters. If you can understand how to read them, it allows everything else to become a lot easier to interpret and understand. And we can see that although this is a red candle, we have a long tail to the downside, which shows us the bears were once trading down there. There was a rejection. There was a sign of either, and probably a little bit of both, loss of selling pressure as we end the week and come into a previous level of structure, which is definitely a profit-taking zone. But just like we saw in the past, there's probably some buying pressure down here before. I know if I was a bull, and I am a bull in this case, this is the area where I'm saying, hey, we were able to put in some work here and fight them off last time. Let's do it again. And if I'm a bear, I'm saying, hey, I was able to ride this down, and then this is where the train ended. I'm probably going to be smart and take some profits off at this level. And what you do is you see a shift from sellers wanting to sell to buyers wanting to buy, and then sellers wanting to buy as well, because buying is their way of getting out of previous selling positions and making profit. So you see this shift from selling pressure in the market to buying pressure in the market, and that's what makes markets move. So a nice structural level. Major structure, RSI is oversold here on the daily. We have lots of room to the upside to look for potential targets right there and right there. And if you were to go down to a lower time frame, right, I was going to say we may see a double bottom. We're not quite there yet. We need to see a little bit more, but you may be able to see kind of a simple pattern formation form here, whether it's a double bottom, whether it's a sideways consolidation and a break to the upside. There may be a little clue on the lower time frames as well that allows you to get involved in this trade if you're not looking for like a 3-bar reversal or something of such on the daily here on the FTSE. I don't think I mentioned what we were on. So hope you enjoyed the video. Hit that like button and subscribe before you leave. Also, if you want to accelerate your path onto becoming a consistently profitable trader, check out the website, www.tier1trading.com. We have courses, we have live sessions, we have a great community of traders from all different levels, brand spanking new to professional and full-time. It's a great place to be around. If you want to do something, the best way to do it is surrounding yourself with others who want to do the same thing. And of course, coaches who have done what you're looking to do. So www.tier1trading.com. Start with that 14-day risk-free trial. Make sure the fit is right before you make any type of commitment. And I'll see you guys next week with another Trading Edge video and, of course, brand new episodes of the Trading Coach Podcast. See ya.